A very good morning, good evening, good afternoon, and welcome to the Booms and Bust Show. My name is Jonathan Davis, and I am recording this episode of the Booms and Bust Show at approximately 12:30 in the afternoon on Monday, the 8th of January 2018. I've been away for a couple of weeks for the festive period, had a great break. I hope you had too. I really don't have a great deal of time given the amount of stuff I want to get through today. I'm going straight into President Netanyahu of Israel.
I heard today Iran's President Rouhani's claim that Israel is behind the protests in Iran. It's not only false, it's laughable. And unlike Rouhani, I will not insult the Iranian people. They deserve better. Brave Iranians are pouring into the streets. They seek freedom. They seek justice. They seek the basic liberties that have been denied to them for decades. Iran's cruel regime wastes tens of billions of dollars spreading hate. This money could have built schools and hospitals. No wonder mothers and fathers are marching in the streets. The regime is terrified of them, of their own people. That's why they jail students. That's why they ban social media. But I'm sure that fear will not triumph, because the Iranian people are smart, they're sophisticated, they are proud. Today they risk everything for freedom. Sadly, many European governments watch in silence as heroic young Iranians are beaten in the streets. That's just not right, and I, for one, will not stay silent. This regime tries desperately to sow hate between us, but they won't succeed. And when this regime finally falls, and one day it will, Iranians and Israelis will be great friends once again. I wish the Iranian people success in their noble quest for freedom.
Surely the most surprising thing to be happening in the world are the Iranian protests. It just shows you how much the mainstream media despises us, lies to us. How if Donald Trump or David Davis or Nigel Farage were to sneeze in a particular way, they would laugh at them for the next 72 hours. You get millions of ordinary folk on the streets of Iran protesting openly about the theocracy, the fascists, Islamists who run Iran in the disgusting, brutal way that they do. And they say, oh, they're on the streets, there's not many of them, and it's about the economy. No, it ain't. It's about we need democracy. And of course, it is truly disgusting how every Western leader that I can think of, apart from Trump, has shown their bitterness over the brutality of the Iranian regime. Trump is supporting the people, and all Theresa May and Boris Johnson can say is they are concerned. They are what? And of course, Corbyn and the lefties are saying absolutely nothing. They don't care about the people, those lefties in the West. They just care about getting power any which way. And I'll refer you to the Twitter account at BoomsBusts Show. Find the pinned tweet, click on it, scroll down. Indeed, while I'm at it, if you care to star rate on iTunes by clicking on iTunes, that would be fantastic. But scroll down further, you'll see pictures and charts that I'm using in today's show. The first one is the armchair feminist, the American, the white, with her stars and stripes hijab. And then you see an actual feminist, an Iranian woman taking off her hijab and waving it. For that woman is thrown into jail, tortured, probably multiple raped, and goodness knows if she'll ever get free from prison. It's strange how the so-called progressives, there's nothing progressive about these people in America, are fetishizing the hijab, claiming it's a symbol of feminism, while real feminists in Iran are risking and are actually being incarcerated and murdered by these women removing their hijabs. Trump sides with the Iranians who seek freedom from the totalitarian regime. Obama chose to side with the oppressive government by giving them $1.7 billion and giving into them in so many other ways. You know, as much as Trump is an idiot and a child, and let's face it, who isn't? All I'll say to you are 4 words: Iran, Israel, Korea, and Cuba. In each case of world geopolitics, Trump is winning. He's turning the tide against the oppressors and for the people. Don't look at what they say. Look at what he does. And there's another picture which for me encapsulates 2017, given that this is the first show of 2018. You see a young man just standing there holding a sign saying the right to openly discuss ideas must be defended. And then you see a raving lunatic lefty saying F.K. off Nazi scum. Lunatics. Freedom of speech to them is okay so long as they agree with you. No, that's not what freedom of speech means, you numpties, you fascists. How can you not see that you are one stage away from the Soviet communists and the National Socialists? How can you not see that? You know, I've been on Twitter now for 8.5 years in my personal account, not my Booms Bus Show account. My personal account is Jonathan Davis, where the O is a 0. And I can tell you, I love Twitter. And the best thing about Twitter is that you can choose and have mentors without their consent. All you have to do is click follow. I have learned so much from Twitter over the last 8 odd years. And I know it will continue to teach me for the next however long. And if there are idiots out there that you can't stand, fine. Just mute them or block them. Don't complain about them. They're not going to change their behaviour. I'll tell you another great thing about Twitter, bearing in mind, for new listeners, the Booms and Bus Show is about free market capitalism. It's about libertarianism. It's also about money, economics, markets, and who knows, maybe helping you to think about ways of improving your retirement fund. There's another thing which is really good about Twitter. Earlier last year, February, March time, I think it was probably March, I bought some Twitter shares. A few weeks later, I doubled my shareholding. It was something like $16. I don't know. I don't need to know the exact price. That's not the way I do things. It's currently somewhere between, I don't know, $22 and $25. It's gone up, I don't know, 30, 40, 50% in less than a year. But as far as I'm concerned, it's just started. It's freakishly cheap. Twitter is the most powerful news and relationship organization on the planet. I know, of course, about Facebook. I get that. I know it's a fraction of what Facebook is doing. I get that. But Facebook isn't serious. Twitter is serious. And the power that Twitter has not even, they haven't even scratched the surface of tapping into it. Trump gets Twitter's power. I get Twitter's power not from the messages that I send out, because there's only 3,000 people following me. No, it's from the messages that I, shall we say, receive, and I often retweet. And I remember saying to someone who's really quite influential in investment circles last summer, no names, no pack drill, in the UK. I said to him, I haven't bought this for like a trade or the next year or two. I'm probably going to hold this forever. Because can you imagine where Twitter is going to be in 10 or 20 years' time? I think it's going to be unimaginable. I think it's going to be, in terms of its value, another Amazon, another Google, Microsoft, Apple, Facebook, Alibaba, JD.com. I see no reason why it couldn't make me 10,000% over the next 10 or 20 years. I see no reason why not. And you know what? If it only makes me 500%, am I going to complain? I don't think so. Interesting stat about 2017. It is now confirmed that not a single passenger death occurred on a commercial jet aircraft anywhere on Earth. That is the first time in 60 years, and the first since aircraft became the dominant form of distance travel. Isn't that quite interesting? The next photo, in fact, is of the New York Times from Thursday, the 26th of December, 1991. Why am I showing you something from December the 26th? Because I often do on This Week in History, but we've got a couple of weeks to catch up on. Basically, they announced the end of the Soviet Union. What a wonderful day in history. It took 150 million people out of the repression, the totalitarianism, the anti-democracy of the Soviet Union. 150 million, no, that's only Russia. Then, of course, you've got the tens, hundreds of millions, shall I say, in the ex-Soviet territories. And that was a wonderful thing. You've got Gorbachev there, the last Soviet leader. He resigns. The United States recognizes the republics' independence, the various republics. Absolutely fantastic day in history. All those people freed, never mind East Germany and so on, Poland, Hungary, and etc. Absolutely sensational. And look at all the people who've been taken out of poverty in the last 27 years. How wonderful. Okay, move on to something else. I love this from Tour de Meester. He says, Christopher Columbus was perhaps the first economist. When he left to discover America, he didn't know where he was going. When he got there, he didn't know where he was. When he returned, he didn't know where he'd been. And it was all done on a government grant. Brilliant. That's not public sector nonsense. I don't know what is. And yes, that is exactly what economists are. They don't know where they're going, they don't know where they are, and they don't know where they've been. Don't listen to economists. In middle of December, I did a lot on Trump and America moving in due course the US Embassy in Israel from Tel Aviv to Jerusalem. Another absolutely great act which will help peace in the world. Short term, not necessarily. Longer term, I think without question. And then you had a United Nations vote, whether or not they agreed with it. And I watched the vote. It was a circular table. And all but one UN representatives put their hand up against the US decision. And of course, Nikki Haley, the US ambassador to the United Nations, raised her hand. And her face was a just total scream. But get this, who also voted along with the despots? The United Kingdom voted against the United States moving the embassy to the capital of Israel. The United Kingdom. Theresa May and Boris Johnson, in other words. What's happened now is beautiful. Trump and Haley are so fed up with the despotism, the absolute hypocrisy of the United Nations when you get the likes of Iraq and Saudi Arabia on the Human Rights Convention. I mean, a committee. Can you believe it? I mean, it's just unbelievable. So, America has now slashed their funding to the UN to the tune of $285 million. That is an absolutely brilliant response, and it's exactly what should have happened years ago, many years ago, if not decades ago. And if these despots want this nonsense organisation, then they should pay for it themselves. I note that the world's richest 0.7% owns 46% of the world's wealth, and the world's poorest 70% owns merely 2.7% of the world's wealth, according to Credit Suisse. It sounds very much like cryptocurrencies. Now, there's an interesting chart for the last, 60 years of OECD. On the left-hand side, real GDP growth means inflation adjusted. And you also see on the right-hand side an inverted index of total general government tax receipts as a percent of GDP. So what it's showing is that as real GDP has been falling, taxes have been rising, and in the last 5 or 10 years, you've seen GDP start to rise, left-hand column, and look at that. You see taxes as a percent of GDP start to fall. Remember, it's an inverted index on the right-hand side. Well, you and I know that's blooming obvious. If you stop taking from the people who are creating the wealth, more people will come and create wealth, called in the form of GDP. Right, moving on to more economics. Look at that next amazing chart. 800 years of interest rates. And this is according to some bloke at Harvard Uni. And we have, as I've said to you before, we've had for the last several years, and we still have, the lowest interest rates in history. I mean, that is just crazy when you think about it. And the blue columns are when you had bond bull markets. In other words, interest rates fell, so government bond prices rose, and when you didn't have a bond bull market, the white spaces in other words, you saw interest rates rise and bond prices fall. Let me remind you that particularly because of pension funds, because of need for income, the bond markets are easily 5 times the size of the equity markets. You never hear about bond prices. You hear about the FTSE, you hear about the Dow, and so on. And what you see there, we've had an amazing bond bull market for 40 or so years. But how far can interest rates fall? Well, they're already at the lowest in history. It seems more likely that they're going to rise long term than fall. This is not me making a forecast. I'm saying it's more likely. We have to watch the charts and so on and so on. But it's more likely that rates will rise over the long term than fall. Thus, we'll be in a bond bear market, likely for years, if not decades. The last time we had this was the 1960s to the early 1980s. And equities did nothing in 15 to 20 years. And yet you had 75% inflation. Thus, the real value of equities fell 75%. So I'm just saying, something to bear in mind for the long term. Fascinating chart, forecasts of the global electricity demand from electric vehicles, just electric vehicles, over the next 20 or so years. And quite simply, it's going to go up dramatically, like 1,000%. And there's only one way they're going to achieve that supply of electricity, and it's uranium, folks. You should listen to the last show I did in 2017, and uranium is such a compelling retirement fund investment. Uranium miners, it's just amazing. I've told my clients that I'm expecting 1,000 to 2,000% on our uranium investments over the next 5 to 10 years. Stock market in 2017, absolutely fascinating. For the first time in history, the S&P 500, which is the daddy of major developed stock markets, it finished the year with positive performance every single month. First time in history, folks. That's a long time history. That's amazing. And the outturn for the year, an amazing 22%. And that doesn't even include dividend income. Fascinating though, the next chart showed that in the very last trading day of the year, at the end of December, the S&P reached an all-time high and then had a bearish engulfing candle and closed down on the day. Absolutely fascinating, somewhat bearish, but what then happened as the markets opened last Tuesday? Well, we've had a big open to the year, the first 4 days of the year. The thing to note, the S&P 500 finished higher for the 9th consecutive year. That is equaling the record which was set in 1991 to 1999 on a total return basis. So it's been an astonishing 9 years. And so much so that as of Friday, the 5th of January at the close, the S&P has now had 386 days without a 5% correction. It equals the second longest streak in history of no 5% correction. The last one was in the 1960s. And the longest streak in the 1990s, 20 years ago, was 394 days merely, what's that? 7 days longer. So get this, listener. By next week, the S&P 500 might have seen the longest period in its history of not having had a 5% correction. Now, I know what you're thinking. Well, if it's been up for so long and it's had a fantastic run, it's just about ready to roll over, isn't it? Why? If you toss a coin and it's heads, what's the probability that if you toss it again, it's heads? The answer is exactly the same probability than the first toss. You could toss a coin 100 times and each toss of the coin has the exact same probability of heads or tails as each of the prior 100 tosses. 50-50. 50%. 1 and 2. The prior toss of the coin has absolutely no relationship with the next toss of the coin. Similarly, just because of what has happened in the stock market doesn't mean that therefore something has to happen going forward. In the sense that because it's gone up for a long time, it has to go down. But I'll tell you what is also useful to know. We've had Tuesday, Wednesday, Thursday and Friday when the markets have been open at the beginning of January. The S&P 500 is up 2.6% in those 4 days. Extrapolate that for the year. Oh my God, the market's going to go up 300%. No, it's not going to go up 300%. But I'll tell you this fascinating statistic. Since 1950, when the market has been up over 2% in the first 5 days of the market's year, there have been 15 occasions when that's happened out of 67 occasions. And in each of the 15 occasions, the S&P has closed the year 31st of December higher every single time. And get this, the average return was 18.5%. So if you're a bull, you want to watch what happens today, Monday the 8th of January. If the first 5 days are up over 2% from the open, then I'm just saying that 15 out of 15 times that's happened since 1950, you can expect a higher year. Similarly, I was looking at a watch list of 54 countries around the world and their stock markets, and not one of their ETFs was negative last week. 54 out of 54 positive. It's not about the S&P or the Dow or the Nasdaq. This is a global rise, reflation, stock market growth, whatever you want to call it. It's global, listener. This is full participation in this 54 country watch list, and it is rare. And by the way, Russia was the worst performer in 2017, and last week it was the best performer, growing 6.9% over the 4 days. And that 4 days actually is quite humorous because I tweeted a few days ago that our clients didn't have a particularly brilliant year last year, 2017. We made 25% in 2016. We made 2 or 3% net last year. Now it's quite funny because in the first 4 days of the year, we made 2% net. So we made basically the same in the first week that we made in the whole of last year. What I believe has been happening, and I've been telling my clients this, a lot of what we expected to happen last year simply hasn't happened. We have hardly changed anything in our holdings. In other words, it should very likely happen this year, what we expected to happen last year, and indeed the first trading week of the year suggests that that is exactly the case. But, on verra, as I always say on Twitter. You could go on to Zoopla if you're interested in the UK housing prices and housing market. For the second year running, I was asked to be the wealth advisor in a group of housing market participants. There's an economist, there's an estate agent, there's a surveyor, and so on. There's a building society person, and I think there was 8 of us in this year's survey, and we all had to make a comment as to what we thought was going to happen to house prices this year. And what I basically said to them was, first of all, the headwinds are you've got the higher and higher taxes for the higher earner buy-to-letters. That is, of course, a tailwind for demand. And indeed, it's also supporting supply. Some buy-to-letters are getting out. Also, we're probably in a rising interest rate environment. On the other hand, I don't see a recession this year. So what I said was, I see no change this year in prices for houses and for rents. I added, and indeed I'm glad that they included it in my short commentary there, if there's to be a surprise in prices, it will be to the downside. What I found fascinating about the survey is out of the 8 commentators, of course, I was the most bearish. That's not so fascinating. But I was bearish at 0%. But 6 of the others were like 1 or 2% growth. And the other guy was 5%. But they're hardly bullish, are they? They've got to be bullish to keep their incomes going, and they're not bullish. So maybe I was too bullish on that. Someone in the comments below the piece online, as I say, it's on Zoopla, look for house price forecasts or something like that. Someone said that it's obvious the market's going to collapse over the long term, whatever. Well, nothing's obvious. I actually replied to the guy. I said, generally I agree with you. I believe we've seen the top in house prices for a generation, as I've discussed with you, listener, many times. But my brief was to talk about 2018. And the fact is, governments, and particularly this socialist government under Theresa May and Philip Hammond, they will always support the house prices where they possibly can. Moving on to other financial markets, there is a very long-term chart back to 1970 of commodities relative to the S&P 500. And what do you see? You see that over the last nearly half a decade now, commodities relative to the S&P is at extreme lows. It's never been this low, even in the commodity bust and the dot-com mania of the late 1990s, and indeed coming out of the 1960s, when you had very low inflation and so on. Relative to the S&P, commodities were very low then. but we're even lower now. Don't tell me that this isn't the time to be investing in commodities for your retirement, because it absolutely is, in my humble opinion. And of course, we won't know for another 10 or 20 years, although I think likely we'll probably know within a much shorter time space than that. What also did well last year was, in fact, gold. Gold had such a good year last year. In fact, it had its best year since 2010. See the bar chart there. Is it yet confirmed that it's in a multi-month bull market, even though since mid-December it's had a very sizable rally? It's not yet confirmed. What we know is this: in each of the last 4 years, December, January, February has been a sizable rally for gold and precious metals generally. However, even though we're somewhat above $1,300, I would say to you that, say, $1,280 to $1,315 an ounce is probably the pivot. Above $1,300, $1,315, you've got to be positive gold. Below $1,300, $1,280, you've got to be bearish gold. You've got to be, according to the charts. If we get above 1315 and we stay there, then you've got to be looking at 1350, which was the autumn high. Above 1350, if you get there, you're looking at 1370, 75, which was the 2016 summer high. Above that, and staying, well, I'm telling you, you're looking at 1550 to 1700. In that scenario, gold miners will go up 50 to 100%. Juniors will go up, shall we say, 80 to 160% in a few months. But it's not yet confirmed. Yes, if you haven't dipped your toe in, you should probably do so. But as I've said to clients, there's an equal chance that we could see a major rally as we could see still a major fall. There's a lot of people on Twitter who are still banking on 1250 to 1200. They might be right. There's also a sizable contingent who are saying the rally's in, we're heading for 1600 now. Well, they might be right. You pays your money, takes your chance. What we do see, looking at the next chart, is that gold miners, which tend to lead the commodity itself, gold miners is due for an extended outperformance versus gold. According to that chart, gold miners is dirt cheap relative to gold. So when it gets going, miners are just going to go crazy. Our junior gold miners fund that we invested in from January 16 to July, maybe August 16, it went up 220%. Fantastic. And as I say, that could happen again, but it's not yet confirmed. The pound is at an interesting spot. Look at the chart. This is the pound against the dollar. Forget Brexit. You can't. There's nothing on there that suggested that Brexit caused the fall. It's only the last 4 years, I beg your pardon, and you see the pound falling against the dollar consistently. And if you took that chart back 10, 50 years, you'd see the pound falling consistently. The pound has been rising throughout 2017. And indeed since about October of 2017. Remember that numpty carnage in the Bank of England. He cut the UK base rate in the late summer, early autumn of 2017. It was totally and utterly to save his own face. He said the world would go to hell in a handcart, the pound would collapse, the economy would collapse. It didn't, so he cut the interest rate anyway. Total numpty. So even with now interest rate back to 0.5%, it shouldn't have gone down in the first place. Of course, we're seeing the pound rising, but we've seen it rising since October last year anyway. And it's clearly at a pivotal point, much higher than you're looking at a serious bull market in pounds, which could well therefore make our summer holidays cheaper. It could make our imports cheaper, which is going to help our battle against global inflation, which will be excellent, no question. You'll have heard, I'm sure, about Spectre. No, I'm not talking about James Bond. I'm talking about the loophole in computer chips. And there's another one which I can't remember off the top of my head, which has affected AMD, it's affected Intel, and it's also affected the other company which escapes my mind right now. I tell you what, this started to come across the news wires in late December, very early January, and the Intel chief executive sold $24 million worth of stock as it was coming over the wires. And didn't he do well? He sold everything he possibly could. Literally everything he possibly could. So always at least know what the insiders are doing, because Intel stock prices crashed. But it's not just Intel. If the insiders are buying, we really should be looking at whether or not we should be buying. If the insiders are selling, follow what the insiders are at least doing. I got through a lot, didn't I? Finishing off, as ever, with quotes of the week. Intellectuals are naturally attracted by the idea of a planned society, said Roger Scruton, in the belief that they will be in charge of it. As a result, they tend to lose sight of the fact that real social discourse is part of day-to-day problem solving and the minute search for agreement. In other words, listener, intellectuals, aka the academics, don't listen to them. They are fascists, they are elitists, and they are certainly not there to help you and me. Nassim Taleb, he of Black Swan fame, spent some time talking about intellectuals. Even if Trump, he said, became suddenly left-wing, he would still be hated by the intellectuals who would drum up arguments. Why? They obsessively hate Trump because he is both totally non-intellectual and he doesn't hide it. He makes intellectuals feel irrelevant. And my God, listener, they hate that, don't they? Taleb carried on. During the 50s to the 70s, intellectual support for Stalinism, Maoism and Trotskyism or Arabism, there was evidence of the camps, the murders. It was ignored for decades by the intellectuals. Today, he says, if an intellectual expresses opinions that are vaguely neutral about Trump, his career is destroyed. He says, I despise intellectuals. I agree with you, Mr. Taleb. He goes on to say, when John Gray supported Thatcher's economics, he was treated like a serial killer by his disappears later, as may happen with Trump. Academics started to rally to her, as in Thatcher, as results started to show. But nobody apologised to John Gray for the harm done to him. Intellectuals hate independent people. When you see, hear or read doctor this and doctor that, and they come from the university of this or that, or they come from this or that think tank, be extremely wary of what they're saying, because they do not work for you. George Orwell said this, and my God, it's so relevant to 2017. If all others accepted the lie which the party imposed, then the lie passed into history and became truth. Who controls the past controls the future. And I finish on a markets quote from one of the most successful investors of all time, Sir John Templeton. Bull markets are born on pessimism, grown on skepticism, mature on optimism, and die in euphoria. The time of maximum pessimism is the best time to buy. And the time of maximum optimism is the best time to sell. In other words, buy low, sell high, buy when there's blood on the streets, sell when there's absolute mania. And when the next person says to you, oh, you can't invest in the stock market, everyone's already invested. Really? So why is it when there's a 1% fall in the stock market, you immediately see everyone massively negative? No. If there was real optimism and mania and euphoria in the stock market, it would be like the cryptocurrencies. Whenever there's a 30-40% fall in a crypto, what do you hear screaming from the rooftops? HODL. That's the in term. In other words, they've turned the L and the D round in the word hold. Just hold on and it'll be all right. That's mania. Don't follow the charts. Don't look at any supports being taken out. Just stay in. It'll be okay. And that's what they said in 2008. And that's what they said in 99-2000. They're not saying it today. Whenever there's a 1% fall, they say, you got to get out. The crash is coming. When you hear them say, oh, don't worry about it. 10% fall? Stay in. The market's okay. Look, it's been up for years. It'll be all right. We're a long, long way from that, my listener. Thank you for listening to the Booms and Bust Show. I'm here every week. Look at the Booms Busts Show Twitter account. Hey, if you want to contact me, you can do so through Twitter, or you can email me at jd@theboomsandbustsshow.com. Happy to look at your own situation and make generic comments should you wish. Incidentally, I don't take on clients of under about £500,000 financial assets. However, I do have excellent relationship with a firm, an excellent firm who will look after clients with a lower value of investable funds. I've had a blast, and I'll see you next week.